Hey, what's up YouTube? Houston here. Today's video we're talking about how to increase your credit score. But the bigger fact is, why did your credit score drop? Okay, because right now a lot of people are saying that their credit score is going down and they're trying to figure out what's up here. And here's the play. Here's what's going on. All right, for some of you guys, if you have too many maxed out credit cards, what's happening is that your credit card company, they're starting to cut down your limit. So if you have credit cards with carrying multiple balances on it over that 30%, your credit card companies are looking at this, right? And they're looking at this and they're starting to cut down your balance, right? And because they cut down your balance, now this pushes your DTI, your debt to income, up higher, okay? And which in terms of, you probably can get them on the phone and try to negotiate to try to get your original line back, but this is what's happening and why a lot of people's credit score is being affected. Now, in terms of what else is affecting, collections. A collection on your credit account, okay? For a 30-day collections, your credit score can go down from 80 to 100 points. All right. Then if it's a 60-day collections, you're looking at 100 to 120 points. All right. And then if you're doing a 90 days, then you're going into charge-off status. Okay. The credit's just been cooked. All right. Now, here's the thing about it, talking about the charge-offs. If you have a charge-off with a zero balance, this is not calculated into your FICO score. All right, now your Vantage score will still pick it up, but not the FICO score, which 90% of the banks use. So if you want to see your real FICO score, click the link in the description so you can see exactly what's going on there. Now, that's another thing. Now, here's another thing, is a 30-day late. A 30-day late payment can be anywhere from, harm your credit anywhere from 50 to 80 points on a 30-day late. All right, and so if you're late on your payment, here's the thing about it. I know, like with Navy Federal, all right, they don't report a 30-day late until you after 60 days. Okay, that's their thing. If it's after 60 days, then we'll report. All right, but if you're 30 days late, but you can get that payment into Navy Federal, then they won't report you as late. All right, now you actually have up to 28 days after the due date to actually pay your credit card account on time, which a lot of people don't know that. But at all costs, try not to be late. Even if you have to pay the minimum on your accounts just to keep them active, do that. Do not let your accounts go into collections, late, or charge off, because it's going to make it very hard for you, because it has a ripple effect on your other accounts. That's right. One account can affect the rest of the accounts and for the creditors and stuff. Well, again, like I said, they will possibly cut the limits on your credit cards just from somebody else showing a 30-day late on your account. So you have to be very careful with that. Now, another thing that will affect you is a paid off loan. That's right. That's the reason I tell people a paid off loan, it can affect you up to 40 points. All right, so if you pay off a car loan, then it can affect you up to 40 points. If you have a personal loan and you paid it off and you don't have another loan on the credit file, then again, that can affect you up to 40 points. That's the reason I tell people, in reference to the credit mix, you want to have at least 2 revolving. You want to have a personal loan on there, maybe if you can get a car loan, but you want to have between 4 and 5 accounts on there to have a perfect mix in your credit file. Okay, so not just a whole bunch of revolving. I know when people are rebuilding their credit, they go after a lot of revolving accounts, okay, low-hanging fruit credit cards and stuff, and they're adding on like rent payments and stuff like that. But definitely, just having open revolving accounts on the credit file would definitely hurt you. Also, I'll tell you something else. When you're applying for new credit, having multiple open revolving accounts and stuff like that, that count against you as well. So that's the reason I tell people, if you planning on applying for a new credit card or new loan or whatever, make sure that your smallest open revolving accounts, make sure you pay those down to either 10% or 0 if possible. Okay, again, it gives you a higher chance of being approved for that next credit card with a higher limit at that. Now, here's another thing, the utilization. That utilization going above 30%, that hurts. That really hurts you. Now, the key, if you want to have always, if you want your credit score to just jump, say you want your credit score to jump up 50 to 100 points, and you have open revolving credit, then pay your credit cards down under 10%, not 30%, but under 10%. Okay, like I said, if you're able to pay some of the smaller open revolving off, will be better. But if you're not, at least pay your and you're trying to get your credit score to jump up immediately to have a faster effect, you want to pay it under 10%. Now, here's the thing about in terms of how fast it reflects. On Vantage Score is going to, you'll see a change. Okay, you can see a change within 24 or 48 hours. Not with FICO Score. With FICO, it's usually going to take almost up to 30 days for you to actually see that change. Okay, so that's when you see people say, I got my my credit score went up 100 points within 48 hours or whatever. Again, on the Vantage side, yes, okay, but not, it won't reflect on the FICO side that fast. All right, so in terms of like, many people use Credit Karma and stuff, and I've been making videos about Credit Karma. Like, you can dispute items, negative items and stuff like that on Credit Karma. Well, they'll take it off, and then within the first 24 to 48 hours, you may see a change, right? Because it's in the dispute process, so it's no longer, they're no longer allowed to report that data and stuff. It has to stop. All data, once you start disputing, all data is supposed to stop, okay? And so with your Vantage Score, like I said, because it picks up data much faster than with your FICO Score, that's the reason you see your FICO Score go up higher, all right? So that's another thing that can bring your credit score down. Closing out old accounts. Do not ever, okay, if that account is under I would say this, if it's under 2 years old and you want to close it out, like those high interest credit cards where you have to pay the fees to start it up, and you have this monthly fee and the annual fee, credit cards that have a high fees or whatever, if they're brand new, then those are okay accounts for you to close. But if it's over 2 years old, do not close that account, okay? Because it can affect your age history, depending on how many accounts you have open that have age on them, all right? But even if you have those high interest credit cards and stuff that are old, and they're older than your new credit cards that have a higher limit on them, do not close out those small balance credit cards, okay? Pay them down to 0, but do not close them out, all right? Because if you close them out, again, if they're 2 years older, 2 years or older, what happened is your credit score dropped because of that history, all right? So that's the reason you don't want to actually do that. Now, when you apply for multiple credit cards, all right, so there are hacks out there where you can apply for multiple credit cards, but it depends on, are you going through different financial institutions, or are you going through the same financial institution? All right, so like, say that you was applying for American Express credit cards or whatever, because they do a lot of internal scoring, it won't affect the credit score. Some credit unions may let you use one hard pull that'll last up to 30 days, like Pennsylvania State Employees Credit Union, right? So you can use that hard pull and apply for like 3 different type of accounts with it. If it's the same financial institution, one hard pull up to 30 days, it can happen. But if you're trying to go from this bank to that bank or whatever, then again, you're talking about multiple hard pulls on the credit file, all right? So that would definitely drop your credit score, okay? Now, here's another one, too many inquiries. Now, with the inquiries, here's the thing about it. Your inquiries from 1 point up to 12 points, all right? And the thing about it, especially if you have bad credit and say that you're trying to get a car loan, or you're trying to find a credit card from a lender and stuff like that, and you have bad credit with the major banks. If you have bad credit, we know that, hey, if you got a 550, unless it's like Navy Federal, with the other major banks like Bank of America, US Bank, Chase and stuff like that, they're going to turn you down or whatever. But when you're shopping and you're trying to get multiple credit cards, or you're trying to shop for a car loan, the reason I'm saying car loans is because it's the most notorious in terms of putting on multiple credit lines and stuff like that, or even shopping for a mortgage. Okay, so those are the things that put on the multiple inquiries and stuff. Now I would tell you this: if you have bad credit and you're trying to shop for a mortgage, do not go through the banks. The best place to go through is through a mortgage broker, okay? Because they have more flexibility, they have a bigger database, so they know who may work with you when you have bad credit, okay? So in terms of, those are the things that's going to affect you, bringing the credit score down. Also, those are the things that you need to fix in order to boost the credit score up. All right, so if you have any other questions about business credit funding, personal credit funding, click the link in the description and schedule a one-on-one consultation. Thank you.